My name is Xavier Gomez. I'm a co-founder of MUWPAY, a cross-chain aggregator. Co-panelists will share some insight about the path toward TradFi and crypto convergence. As you know, we are in a turning point at the moment with the acceleration of the adoption in B2B and B2C about crypto and blockchain stuff. And of course, the TradFi, what will be the reaction of TradFi due to this innovation. Let's introduce each of you and give some information about the subject of today. Please, Sergej.
Yes, hi everyone. My name is Sergej Kunz. I'm co-founder of 1inch, software architect, software engineer, working in this space over 5 years. Building on 1inch, maybe you have heard already about our aggregation, our wallets. So we are pushing the borders of Web3 further and further.
Thank you, Sergej. Robyn?
Hi everyone. My name is Robyn Friedman. I head up blockchain and digital assets at Nomura. Nomura has been involved since for many years now. We set up our first digital asset custodian called Komainu in 2018. From there, we've we've got a tokenization platform out of Japan, as well as most recently we set up Laser Digital, which is our crypto trading and venture arm. We also, my mandate within Nomura is twofold. We set up JVs, projects internally, as well as strategic investment. And my background is I originally am a quant, maths, computers, ran trading desks in the city for years. Actually left finance in 2017 to jump into crypto. Been involved in various areas across from NFTs, RWAs, zero knowledge proof. My first role was a chief blockchain officer in a gaming industry. And in 2021, I rejoined Nomura to come look at exactly this, like the convergence of crypto, DeFi, and TradFi. So this topic's very close to my heart, and I'm looking forward to discussing this on the panel today.
Thank you, Robyn. Aditya, please.
Awesome. Hi, everyone. My name is Aditya Turakhia. I work at Ripple, heading up our EMEA trading and markets team, where I look at all things liquidity and risk management. So Ripple, for those of you who don't know, is an enterprise software company that solves real-world problems using blockchain technology. We build a lot of our solutions around the XRP ledger, which is a public, decentralized, open-source blockchain. Prior to joining Ripple, I spent most of my career in the FX and emerging market space at Goldman Sachs and some high-frequency trading before that.
Thank you to all of us. And for myself, I'm former banker from Credit Suisse and Pictet. I spent all my career in investment banking, algorithmic trading, quant also, quant side of trading. And after I jump on the dark side of entrepreneurship and create my own fintech. And today, MUWPAY, the cross-chain aggregator. Thank you for your introduction. Let's start about this interesting subject. In whole history, for the adoption and to cross on different worlds, one of the most important subjects is more or less the education, to understand each other. On your area, what educational strategies are currently being implemented to help customer, B2B or B2C, each of your side, to understand and adopt DeFi product? Who wants to start?
I would like to start. So we, from our side, we started 2019, and the Web3 experience was really terrible back to the days. And we came to the idea, maybe it makes sense to set up a support team. So we introduced a support chat, and we to educate people who don't really understand how that works, or maybe struggle with the processes they face in blockchain space. We introduced kind of blogs, posts, educational material, like small educational space for the people. You see it also out there, like Binance, for example. They have really nice academy to educate people.
Yeah.
And we go also this way. And of course, we participate in conferences from our side, from One Inch side, and speak also with a lot of people, explain what we do, how we do, and how it works. I have seen multiple times people also from, for example, in Frankfurt, I was on a conference, someone from the government came and really was wondering how does it work, like this magic behind the Web3. So I tried to explain, and we came to the point. I came to the point that actually it makes sense maybe to write our own book. So we are working on our own book, like for Web3. We try to cover all the important things what every person needs to understand, what kind of benefits they get by using this technology.
Yeah, but you have also to have the same language or to adapt with these people, because as you know, in DeFi it's a little bit challenging with a new word, degen, and so on. And when you talk with some banker or insurance and some, it's completely lost.
It's for the people, it's very complicated. I was last year in Australia, and those people, 70% of the Australian people, they own crypto, but they keep it on centralized exchanges and face the risk of like what we have seen with FTX. They can lose everything. And we try to teach them that non-custodian approach, like non-custodian wallet, what we offer, and MetaMask, and also Uniswap offers as well. It's the better way for the user. And but they came then to the question, how can I then use my crypto? Yeah, that's why we also introduced One Inch card recently. Also announced here in Paris, was really nice. So we try to connect the demand of the user, like what they really, what pain points they have, with some educational material and solutions, so we get better adoption.
Yeah. Do you want to add something about education?
Yeah, I think you raised some valid points earlier. I think a lot of new users coming into this space, they particularly suffer from, like, it's not as easy as using an app on your smartphone. It's not intuitive. You can't really pick up DeFi or different applications right off the cuff. You need to understand what a wallet is, how it's cryptographically encrypted, how do you use it, how do you protect it. There's a lot of gap between what actually using the technology and what you would know right off the cuff. So there's 3 different ways you can actually work through education. There's informal education through word of mouth, watching tutorials on YouTube. We try to do a lot of that. Of course, like conferences and events, try to tell our story, what we do as a firm. But also then there's some more formal education where we work with university students right from the ground up to have that formal education on what the technology is and how it actually works. For most of us over here, as professionals coming in from another industry into the crypto space, it's learning on the job and really figuring out by working with people close to the space how the technology really works. But there is this gap between this formal education, informal education, and what it actually takes to use that technology. That's something we as an industry still need to solve for.
Yeah. Robyn, something to add? No?
I would like to add maybe one more thing. If you are speaking about adoption, it's not about retail customer adoption, it's also a B2B adoption and also regulator adoption. Yeah. So it's very important to also to chat with the regulators. We have some lawyers who are actively speaking with regulators, also helping, for example, to the MiCA regulation, for example. A lot of people participated in the MiCA also from our side, so try to give some context and the needs from our side through lawyers to people who also were working in the committee, and yeah, this is very important also to speak with regulators around the globe, not just maybe Europe, also Switzerland. We are very, very open regulator. United Arab Emirates, very, very open and hungry for innovations as well.
And sometimes you don't have the challenge also to educate the regulator, because the regulator has a TradFi experience as a reference. And when you talk about DeFi, is another word, and sometimes they feel a little bit lost.
Yeah, that's true. That's but we go step by step. So, for example, we had really a long time with the UE regulator.
Yeah.
We had to explain that settlement on blockchain is transparent. If it's properly set up, then it's highly secure compared to traditional finance. It's non-custodian settlement. So such things needs to be explained, and as soon they understand it, it works. It works very well. So we, from 1inch, we got a license in the UAE recently. It was really a huge achievement from our team. Yeah, and this was kind of also education of a regulator.
Yeah, clearly. And on the how do you see the integration of smart contract in traditional finance? Today, we see a lot of things, a lot of projects, but in which area traditional finance do you see the most potential for the integration of smart contract?
I can go. So from Nomura's point of view, or from banking at least, you have to wear two hats as these areas evolve from the DeFi side and the TradFi side. And the smart contract, it's really interesting because you can actually go back to first principles of, why blockchain is so transformational. So even in the TradFi side, where you go into a permissioned ledger, closed ecosystem, we are looking at a multitude of use cases where just the ability to atomically swap assets, even if they are not native assets. So it could be an account-based tokenization referring to securities at custodians or central banks. Even just this basic premise brings enormous benefits to the bank. So for instance, being able to atomically swap reduces settlement risk, settlement fails, credit risk, and banks, they hold billions of dollars of reserves against these type of risks for intraday risks. So just including that into the settlement stack starts to bring massive savings. And so as the industry, evolves, and then things become programmable, and you start to be able to actually trade and borrow and lend and manage your collateral, we'll see, these impacts happening across the board. But they, baby steps. Each step, you have to work with the regulators, the education across the board, and basically, I think smart contracts will, transform, the whole landscape of what we're looking at in finance.
Yeah, just to add on, like even at Ripple, we work with a lot of institutional customers across the board. I think one thing that we see is when you look at smart contracts, the area where you're going to disrupt the most is where it's operationally intensive. There's going to be a very high cost of running a particular operation, but it's very rules-based or governed through day-to-day processes, etc., which is written down in stone. So smart contracts do that really well. They'll take these rules, they'll apply them where you need to, and then they will help you automate a lot of your processes downstream. You can see a lot of that then helping streamline operations. Atomic settlements help reduce credit risk, as Robyn pointed out. We'll also see an improvement in downstream processes. So like right from when you trade, you could trade on a decentralized venue. There'll be a lot of financial disintermediation. Right from exchanges, lending and borrowing, insurance. There's a whole host of different types of services. But even for firms that are tokenizing securities, for example, money market instruments, bonds, equity products, they could actually put corporate actions on smart contracts. So coupon payments, dividends, etc., with the help of stable coins can help automate a lot of that workflow as well. So basically anything that's rules-based, anything that can be automated away, smart contracts are really good for that.
So from my side, I would say the traditional finance were built because they had no other options. So they started with paper, then they had this digitalization process, and now we can trade on websites, on Robinhood, on apps, stock, but still not efficient. It's closed system, it's not composable system. So if I as a software company, like maybe startup, would like to build an aggregator among centralized exchanges, like stock exchanges, then it's highly difficult, to get the API access, to get the access to the order book, and our Web3 and decentralized finance world open everything. It's highly transparent, highly efficient, and something what is efficient will win. And I see like our technology as a next step in the evolution of traditional finance. And I'm pretty sure we will soon, maybe 5 years, maybe 10 years.
Oh no, 5 years, please.
It's actually a lot of time in our world, because 1 year in Web3 is like 10 years in traditional world. I get already gray hair.
Be careful, because you have a bunker near to you.
And I'm pretty sure that we will trade stock on our technology, what we are building today on Web3.
Yeah.
So people will settle trades in atomic manner, in fully transparent and non-custodian manner. So we should not trust people. We should just use technology to make it more efficient.
Yeah, I mean, I agree. DeFi is definitely the evolution of TradFi. I mean, it may take a while, and the steps are moving forward. But if you look at like how the internet, the democratization of data over the last 20 years, how that affected, commerce in all forms, and the big giants that came out of it. Blockchains are, it's a value exchange mechanism, a persistence layer. Like we are now looking at what this is. This is the transformation of finance. This is what we're going through. And so it takes time for the technology, for controls to be built on chain, for regulation to catch up. But this is where we are evolving towards. And I agree completely. You can see on the micro, like shares, originally they were bearer certificates, where you had to physically hold them to be able for ownership. And then over time, technology evolved, regulation evolved, and then, you could have centralized players holding registries for these share certificates. Now blockchain, it's a new tool. It allows us to, atomically swap peer-to-peer exchange. And, we're moving on to the next part of trustless, as trustless systems where, we will have decentralized registries. And we're seeing, as you said, in different areas where the regulation has changed. In Germany, you can now use blockchain as a registry. And so in each of these areas, this is just equities. In each of these areas, it's a slow evolution, and it's a technological step change. But this is kind of, what we're going through, and whether it takes how many years, I think this is like the path.
No, clearly. And this is a good point, Robyn. In your experience, what are your thoughts on the increasing interest of traditional institutions in crypto? Because it's every time an issue for TradFi, crypto or not crypto, instead of blockchain, or because you have an active group on that with, in particular, custody, Komainu, Copper, and so on. What is your position on that? So,
I mean, even in my day job, I have to wear two hats. One is, institutional, closed, siloed systems. They still are. There's regulation, there's compliance, there's security, and all the processes of legacy systems and what that involves. And then, there's the other side, which is, the innovation, the evolution that's taking place. And what's the question? Is like how...
In fact, how do you see as a TradFi your crypto policy, your integration? Because some of banks, for example, are not comfortable, and they prefer to implement blockchain instead of crypto offering or some stuff like this.
So it's a slow process. So we exactly that. We forge ahead on the crypto side as well as on the traditional, on the siloed side. And you just got to work step by step in both directions. And as the regulation clarity comes out, and as interoperability and technology and integrations and on-chain controls, start to develop, these two will forge. But it's they seem diametrically opposed. in many ways, but they are, ultimately working towards each other. So that's how we approach it on a daily basis as well, respectfully in each category.
Yeah, and just to double click on that a little more, when you look at, let's go back a few years. In the crypto space, speculation was a big use case. And with most industries, when you first enter the space, you need a way to speculate or get funds into the space itself to help build. I think you saw a lot of development in the beginning around exchanges, around allowing retail to come in to access that kind of trading venue or liquidity in a more regulated manner. After that phase came in, you saw some institutional interest in trying to capitalize on the momentum in there, but that was the only way for folks to get in. That kind of created a spiral. More institutional interest, created more infrastructure, got more institutional interest, and we started developing these different pillars across the entire ecosystem, which span beyond just exchanges and actual real-world developments within the space. And so when you come from a larger institution and you have a large customer base, you have a lot of assets under management, or you're dealing with very large sizes, you can't really have a big bang approach to integration. You need to have bite-sized steps towards that longer adoption. And so you see a lot of firms not necessarily dabbling into crypto, but leveraging the technology. So using blockchain technology to their advantage in different enterprise solutions. You see the likes of Google, Amazon, JP Morgan, Goldman Sachs, PayPal, etc., all entering traditional names in the financial space, entering the enterprise blockchain space, but not necessarily crypto, or more native folks on the crypto side approaching it from scratch. And so they are able to move a little quicker compared to the institutions. I don't think decentralization as a narrative should necessarily get mixed up with this. It's the technology that we need to use and see how we can get the most out of it in the long term. So it's bite-sized pieces. I don't think one's opposed to the other. It's just a different approach to how you adopt that technology.
It means what? It means, do you believe that TradFi and DeFi can coexist in harmony?
Yeah, I think, so that's a very interesting question. I think TradFi and DeFi absolutely can coexist. I think when we say DeFi, I'm just using the term very loosely to describe blockchain technology, but I think they can definitely coexist. There's definitely elements that you can decentralize away where there is financial disintermediation possible. But at Ripple, we look at it in 5 different building blocks. I think it's an interesting way to look at it. The first one is on-ramps and off-ramps. So for you to enter an ecosystem, you need to be able to on-ramp into that ecosystem. So the same way today, before blockchain technology, you would deposit money into a bank. You now have money in your bank account. Or you withdraw it from an ATM. Now you have cash that you can use. A similar on-ramp kind of model exists today. We use stable coins to move into and out of the ecosystem. And then you can operate within that blockchain technology. I think the second thing that we look at, or the second pillar, is around tokenization. So tokenizing any kind of asset of value allows you to express that value on-chain. So once you've on-ramped or off-ramped that particular value, you can represent that value on-chain, which is really important, because then it creates those composable blocks within which you can interact. Thirdly, once you're able to tokenize those assets, you want to store them. You want to be able to hold it in a safe space. You want to have keys to it. You want to be able to you want to make sure that your keys don't get lost and your crypto is not lost forever. And so custody solutions are fairly important. Once you're in the space, I think liquidity becomes very paramount. So even if you're in the space, if you can't really exchange an asset or use it for any particular type of commerce, which is where DeFi and TradFi really intersect in that regard, liquidity plays a very prominent role. And lastly, for institutions to really come into the space, they gotta be comfortable with the AML KYC risk and sanctions risk that they have in interacting with players on chain. So blockchain is great because it's transparent, it's open, you can track every transaction, but it's also anonymous. So until you know who the wallet belongs to, etc., it's very tricky to get comfortable in terms of you violating any of those laws. So I think there's a lot of solutions coming up there, but these are the ways that TradFi and DeFi can actually coexist in the long term.
Great. And Sergej, what about your opinion about that? Because you are more or less the king of DeFi. For you, I think DeFi is the futures. TradFi is more centralized. What's your opinion, your vision about the coexistence in harmony or not with both?
Yeah, we exist together already in the same space. So we use cryptocurrencies and use MasterCard to pay everywhere with crypto. It already works. It's already in the process of adoption. Mm-hmm. So I already said our technology is the next iteration, the next evolution step for the traditional finance, and they started already adopted. Yeah? So my Swiss bank is offering to trade crypto. Yeah. It's offering to store, like to hold crypto in a custody, and I can even take a loan. Like I don't like to sell my Bitcoin right now, but I need maybe 20% of it as cash. And I can take a loan. It's already implemented. Mm-hmm. People already tokenize equity shares. It's already there, at least in Switzerland. So there are people who just tokenize and sell it to private investors. It's already in progress, and I hope it will go much faster than it's now. But it's already kind of, if you think, there was a movie, I don't know if you've seen this, about this scam project, what promised that they have a crypto Visa card. And they actually raised a lot of money, like did the ICO, and actually found out, okay, we can actually do it. And they tried to do it, but they failed. And one of the founders now, like for 20 years in prison or something, the other is free because he gave all the information or something. But it was like maybe 4 years ago, and now we have such cards. Yeah. Wirex is there. Binance did this, Crypto.com is there, we started as well. So it's already there, I would say. Yeah.
Oh, no, that's cool. And what technology innovation within DeFi do you think will have the most significant impact on traditional financial system? Because when you take the financial system, it's huge in terms of application.
I have a really nice example. If you think about payments, just imagine Netflix. Netflix needs to handle a huge amount of payments. Yeah. It's a lot of people who subscribed, and there are different channels. Yeah. And this is huge effort. These are huge costs for the company itself. And we can save it by using payment channels with one complexity. So it's like a payment stream. You can have unlimited amounts of people paying you, single company, unlimited amount of money. Mm-hmm. And this is really, it would like save hundreds of millions of US dollars for such big companies like Netflix. This is a really good example what can be adopted in the next time. And of course, decentralized non-custodian settlement, mm-hmm. For example, decentralized NASDAQ, where someone came and say, okay, I need Ethereum and I would like to pay this price, not less, and try to get for me better price. So just one order, and then professional market makers execute on blockchain, mm-hmm. highly transparent, also compliant manner. It's possible to be compliant in the blockchain. So in our case, we have fully KYB professional market makers with AML screening. We have an extra team who's screening the market makers.
Interesting.
And so also the institutionals are comfortable with that to go into it. So these are kind of really low-hanging fruits from our point of view.
Yeah, just to add on, I think on the liquidity side, that's really interesting to see how DeFi innovations actually come into play. I think one very simple innovation is the AMM structure, where you as a user, if you didn't know much about trading or you didn't know much about how to acquire one asset versus another, you can literally swap one asset for another on various applications. Now that's great because if your token or a token did not have enough liquidity, and AMM structure gives you some kind of reliable liquidity or a way to transact from one asset to another. So I think that's pretty interesting. But more so, there's still a huge barrier to entry for the masses within DeFi, in the sense that there's multiple chains, there's multiple wallets, there's liquidity pots in different places. And so to the extent that we can abstract away the fact that you have to interact in so many chains and so many wallets and so many different places, I think that technology would be hugely powerful. You should be able to interact with the software and say, okay, I want to do X, and you don't know what happens behind the scenes, you just get X. Mm-hmm. The other thing I think we would probably see in terms of DeFi innovation is what I was mentioning before, is services or financial services that can actually be disintermediated. So you'll see DEXs come into play, which is what we mentioned, lending, borrowing. You'll see real-world assets and how they interact with different participants, and a few more of the like. But these are some of the things on DeFi that we would see bring into the TradFi space.
In fact, you just define the new financial services.
I would say more efficient financial services. Just AMM, for example. AMM opened the door for everyone to be a liquidity provider. In the traditional world, they're working with market makers, right? And this door is closed actually for everyone. And AMM opens it. This is just something what's more efficient.
Do you mean yes, maybe, no? Do you mean the current financial services are not efficient?
They are not efficient, yeah. If I trade on a stock exchange, it's horrible experience, really horrible. I get price, I try to trade, they declined because they lost the price somehow. I set the order, I need to wait, I don't know, 10 minutes until it's executed, and then I lost in the price because they had not a really good amount of liquidity. They had to arbitrage it with something, you know. So such things like AMM and liquidity, it offers like AMM, yeah, on DEXs, it offered the opportunity to provide a huge amount of liquidity. Of course, it's distributed. You need to aggregate this. In the traditional world, you cannot properly aggregate the liquidity. So, for example, if someone has like 200 million of US dollars would like to buy Tesla stock, they need to go to each exchange and exchange a little bit, or use market makers, what they do for them. But in our world, we just use aggregators, such 1inch or some other. Yeah. And we know exactly how much liquidity is. And we can also trade through multiple markets. For example, if someone buys for US dollar Tesla stock, it makes sense to exchange US dollar to euros, to Singapore dollar, to Mumbai dollars, and just use multiple market liquidity, different market depths, to execute for the best rate. And it's only possible with our technology, and the old technology it's not built for this. But it's okay. It's okay. It's like before, they did it everything on paper, and then they started to do it on computer. And now everyone should do everything on such things on blockchain.
Robyn?
I mean, I agree completely with these two gentlemen. Yeah, I think also what will become very powerful is the primitive of collateral mobility, being able to collateralize against trades at a click of a button. You know, when controls are, included on chain of, what you can collateralize and who you can trade with, suddenly you've got like an entire universe of more mobile assets and, how they can be used. And I think that will become very, very powerful primitive, as time goes on. I mean, we already see it in the DeFi space in a big way, but as, more assets come on chain from the traditional space, this will change the way we operate in the future.
I know, clearly. And it means a lot of work to do again in order to get the convergence between TradFi and DeFi, but this is not impossible. Clearly, when I listen to you, and we have some hope. Yeah, but again, as mentioned by Sergej and Aditya, the challenge is the mass adoption, clearly, and after the efficiency of financial services for B2B and B2C, because we don't talk about that. the most important is the B2B for sure. In terms of deal and business, is less challenging. But again, the technology could be a big jump, but clearly the DeFi mindset is clearly different of TradFi mindset. And we need to talk each other. And to close, I don't know if you want to share some words about the futures of this subject, each one on your company or project or use case you want to share.
I would like to start shortly. So we are building a fully compliant, fully regulated non-custodian trading venue. So we thought at the beginning it makes sense to do it for institutionals. So we have enough liquidity in decentralized finance. We just to make sure that we understand who is behind the liquidity. Yep. And that's why we have built our intent-based swap approach. I call it decentralized NASDAQ. So people just, how you said, just say what they want and how it's going to be executed. No one should care about that. Yeah. So except professional market makers who can do it very well. Yeah. And on a smart contract level, we can just ensure that it's properly executed. Yeah. So we are going this way. I already said, like UAE, we have a green flag. We have also Switzerland, soon Europe as well. Yeah. So we try to cover everything. It would be, I guess, the first non-custodian, fully regulated exchange in the world.
Okay. In fact, you want to be compliant as a DeFi.
We are working, you know, like at the beginning it was fully unclear what we should do, how this should work, and we introduce multiple services. We sell also our services, like we will launch very soon one in Shield. So every Web3 project can integrate our APIs to understand who connect the wallet. If someone, like a hacker from North Korea, connect a wallet, they will not get any functionality of the application, cannot swap or can do anything with the wallet, because our API, by aggregating multiple providers, ML, compliance providers, can provide information that this is a malicious actor in this space and no one should work with them. Yeah? So we are working on that continuously and improve always and to launch also new products. It's very important to improve the space. Mm-hmm. Yeah? And of course, regulation is very important. It protects people. Yeah? From malicious actors, yeah, and we have high attention on that, yeah.
Thank you, Sergej. Aditya, Robyn, some last word to share with the audience?
Yeah, I'll try to be super succinct on this one. I think the space needs to approach it in two different ways. It's building infrastructure so that you can adopt multiple use cases, and then also different firms trying to bring those use cases, leverage that technology or the institutional side or the infrastructure to bring this vision to life. I think regulation first or compliance first is definitely at the heart of most of us over here. And so just the technology should help us in making that vision a reality.
Robyn?
Yeah, so I agree. We work both internally within the bank to continually educate and, prove value from what this technology can do, working with the regulators to, make sure that there's working towards clarity as well as the space to innovate, and bring and find where these two bridge. And then, also working, on the innovation side to continue to keep abreast, to see how to continue to work to integrate and to make all these pieces come together slowly over the next, few years. Thank you.
Thank you very much.